Hi there once again, it's Vic Noble here. In the last video I talked about the critical importance of being aware of support and resistance levels. Okay, and in this video I want to show you just one of the techniques that I teach for actually getting into a high reward low risk trade once price hits one of these key levels. Okay, I have lots of other techniques for trading off of key levels, but I'll tell you something right now. You only need one. Okay, in our Live Connect service, one of our moderators does nothing but this one technique I'm going to show you. Last year he returned almost 90% in his account, and get this, risking less than 1% of his account on average on any one trade. Okay, that folks is fantastic. So this kind of a trade is first set up by price hitting a key level on a higher time frame. Okay, once that happens, you drop down to a lower time frame and look to see if the MACD indicator is diverging with price. And I'll explain this in more detail in just a minute, showing an actual chart example of exactly what this looks like. Okay, and by the way, MACD is available on pretty much every charting platform there is. Okay, very, very common indicator. All right, now take a look at this chart of the Euro US dollar. This is a daily chart, okay? And notice how earlier this month, this is actually the 24th of August, this is in 2010, price came to an expected level of support. Okay, now why was this an expected key level? Well, because we talked about this in a support resistance session, because it was known, it was a past support resistance level. Look how it came down. It was support, it broke it, it became resistance. This is a level of interest in the market. It came up, it jostled around here a little bit, and then it broke away and it came back to retest it again, the same level here. Okay, not only that, but this level right here is 50% retracement from the low back in June to the high in August. It's an exact 50% retracement. That's what these dotted lines are. These are different Fibonacci retracement levels. This one's 50% right on the button. And I'm going to be talking more about these levels in a later session. We're going to get into Fibonacci levels, but that's an important thing to know. Okay, so now once price hit that level, you have a lot of things saying, hey, this could be support. You don't know for sure, but it might be. So you want to go down to the lower time frames to see if there's any MACD divergence setting up. Okay, well, here's the 1 hour chart, and look what's happening. Here's the 24th we just talked about. See, the swings in price are going lower from here down to here, but look at the corresponding bottoms in the MACD. See, they're going from here up. These wave lows are going higher, but these wave lows are going lower. This is divergence, MACD divergence. This is called MACD positive divergence. So this sets up a MACD divergence buying opportunity. And of course, we have very specific rules for entry, stops, where you take your profits, how to manage the trade once you're in it, all that kind of thing. I won't go into all that right now because all I want to do here is show you that when price hits an expected support resistance level, in this case a support level, on a higher time frame chart, it's time to start looking at the lower time frames for a recognizable pattern. And in this case, it's MACD positive divergence. Okay, now MACD negative divergence is, of course, just the exact opposite. Price rallies up to an expected resistance level, resistance price level on a higher time frame chart. Then we go to the lower time frames to see if there's any, see if there's a recognizable pattern. In this case, MACD negative divergence. If you look at the 18th, see the 18th of August here? Look at what was happening here. See this resistance? It hits it again. It just bounces off. Resistance. It hits it again. It's resistance. See, you have lots of time on these trades. Don't panic. You can see we had all that resistance. If you go down to a 1 hour chart, here's the 18th right here. See that of August? Look at what's going on. The price is going higher, but not the peaks in the MACD. The peaks in price are higher, but the waves, the corresponding waves in the MACD are going down. See, normally, like the prices is going higher, so are the waves in the MACD. Until we get to here, price is going higher, but the MACD is going down. This is MACD negative divergence. Okay, so because the MACD is just not following along, and because we're at resistance on a higher time frame, we just saw that on the 4 hour chart, and showing MACD negative divergence on a lower time frame, this is a great clue that we're heading down. Okay, at least temporarily, if not longer. All right, you'll find that if you have MACD divergence showing up at a key level, on a higher time frame, you'll have a much better chance for the MACD divergence to be a profitable trade. Okay. This idea of price hitting a support resistance level on a higher time frame can be applied to any time frame you like, by the way. Okay, so for example, quite often we'll see divergence on a 15-minute chart after hitting support or resistance on, say, a 1 hour or a 4 hour chart. So I hope you can see now the importance of watching out for those key levels that we've talked about in the past. Okay, now one more thing I should mention here, and that is that as far as market flow goes, remember that I said that key levels override, they trump the market flow. They're more important, okay? They're more important than the market flow. So when you see price hit a key level, it's not uncommon to be taking a MACD divergence trade against the market flow on the higher time frame, and that's okay. All right? In other words, MACD is a reversal pattern at a key level. All right? Alrighty, there's a nice pattern for you to watch out for. I hope you can take full advantage of it. Take care, all the best, and we'll talk to you soon.